U.S. stocks rose overnight, recovering some ground from last week's sell-off. Now, data showed that the U.S. services sector improved in the month of May. In fact, financial stocks ranked among the best performers, but the rebound was temporary as market sentiment remained bearish due to Eurozone's crisis and a slew of poor U.S. data as well. The Dow Jones on closing bell was up 27 points, the S&P 500 index was up 7, and the Nasdaq was up 18 points.
Globally, how are things stacked up? The dollar index is at a one-week low. European markets have closed in the green after a gap of 5 days on some kind of an indication that EU will bail out Spanish banks. US markets, like Aisha indicated, they've also ended on a high note because US economic data of late has been okay. Global volatility last night has plunged by about 5.5%. So globally, I think things are looking calm, things are looking quiet. So if you are a bull, you would insist that this is value buying and global trade seems to be reversing. If you are a bear, you would say this is just a technical recovery in an otherwise oversold environment. And by any stretch of imagination, the problems are not far from over. So I guess you could take each day as it comes. And as of now, it appears that we could be in for a decent day of trade, both locally and globally. Let's connect with Michael Woolfolk, Managing Partner with BNY Mellon Global Partners, joins us live from New York. Michael, good morning. Thank you for joining us. Michael, depending on whom you're asking, I guess you will get a different answer. The bulls are of the view that this is value buying and global trade is reversing, and bears are of the view that market conditions are still choppy and this is just a technical rally, and by any stretch of imagination, global problems are not far from over.
This is the calm before the storm. The reason why we had this decline in market confidence and the movement away from risk appetite towards value was primarily driven by Europe and specifically Greece. That problem has not yet been resolved, and we expect that it will be resolved later this summer, but it will have to wait until after the Greek election and likely several weeks until we understand whether or not the coalition government supports austerity or not.
So, Michael, what is your sense in terms of what the markets are pricing in by way of outcome of the Greece elections?
Yes, at this point, our view is the market believes that there's at least equal odds that we will get a move outside of the Eurozone, a Greek exit, by the end of the year. Our company's view is that it's a 60% chance that they could leave this summer, before U.S. Labor Day.
Michael, so for rest of the summer and for remaining part of June, are you a dollar bull or are you a dollar bear?
I'm very bullish on the U.S. dollar across the board, with one exception, and that's the yen. Our view is that the yen will outperform the dollar.
Michael, if I take the clock back and if I refer to the U.S. unemployment data which came on Friday, is that a red signal? Is that some kind of an early indication, some kind of an harbinger that U.S. economy is recovering, but it is recovering at an anemic pace?
This is a lagging indicator. What it is telling us is that the very, very warm weather that we had not only in America but also in the Northern Hemisphere has pulled economic activity and employment into the winter that would have otherwise taken place in the spring. Now we're getting the comeuppance. Now we're getting that soft patch in economic growth and employment. We will return to the previous trend by the fourth quarter.